Okay, so you really want to get how these financial markets work, right? Not just the surface stuff, but what's actually moving those prices up and down. Well, today we're going deep, deep dive, deep into supply and demand. And we're using, the video that you sent, name of source video, to kind of uncover how these forces are playing out on seriously every chart you can think of, from Bitcoin to even the NASDAQ. Have you ever tried to get a last minute concert ticket and you end up paying way more than you wanted to? That's supply and demand. That's it in action right there. And we're going to show you how to actually spot that same thing happening in the markets.
You know, it's interesting. A lot of kind of new traders I've seen, they just jump right into technical analysis. You know, all those lines, the Fibonacci tools, but they do this without really getting those underlying market dynamics. It's kind of like trying to bake a cake, but you don't even know what the ingredients are.
So let's break down those ingredients, and let's start with the basics. Supply and demand. I remember those curves, vaguely from Econ 101. But how do they translate to something I don't know, let's say Bitcoin?
Okay, so imagine you're looking at a Bitcoin chart. All right. Every time that price jumps up, it's telling you that demand is outweighing the supply. Could be more buyers, entering the market, maybe.
Yeah.
Fueled by a news story or some positive sentiment. Or
Yeah.
maybe some Bitcoin holders, they're pulling their coins off the exchanges,
Right.
making them less available. So they're essentially shrinking that supply.
So even if everybody is excited about Bitcoin, the price won't necessarily just skyrocket unless it's cherry. There are actually fewer coins available to actually buy. It's kind of those limited edition sneakers that everybody wants. The fewer pairs that they actually release, the higher the price goes, even if a million people want them.
Yeah, you got it. It's this constant tug of war between buyers and sellers, and that price reflects where that balance is at any given moment. Now, think about those support and resistance levels that you see on the charts. You know those areas where the price kind of bounces? They're not just random lines. They actually represent clusters of buy and sell orders.
Hold on. So that resistance line, is that where a bunch of sellers are just sitting, waiting to just unload their Bitcoin?
Yeah.
And if the buying pressure isn't strong enough to overcome them, the price just hits a ceiling.
Precisely. Think of it like an auction, if there's a ton of people wanting to sell at a certain price. But there aren't enough buyers willing to pay that much. Well, the price, it's probably going to stall out or even drop. That's your resistance level in action. And then conversely, at support levels, you have a large number of buyers waiting to scoop up Bitcoin at what they see as a bargain, which prevents the price from falling further.
You know what I find fascinating is how this ties into this whole concept of elasticity. We talked about this a little bit earlier, how some things are more sensitive to price changes than others. Does that apply to Bitcoin too, or any asset for that matter?
Oh, yeah, absolutely. Elasticity is key in trading. Think of it like this. Okay. Imagine a highly anticipated NFT drop. Initial supply, super limited. Demand is through the roof. Prices just explode. But as more NFTs from that collection are minted, the supply increases and the price might become more elastic, especially if that initial hype dies down.
So in that scenario, the early birds.
Yeah.
Who got in when supply was super tight? They had a real advantage. And then as more NFTs become available, the price just becomes more sensitive, changes in demand.
Exactly. It's all about understanding how sensitive the market is to those shifts in supply and demand for a particular asset at a particular moment in time.
Okay, so when I'm looking at a chart, I'm trying to make a trading decision. How do I factor in this whole elasticity thing? Is it something you could actually see on the chart? Or is it more about understanding the context of the asset you're trading?
It's a bit of both. You can sometimes infer elasticity based on how the price reacts to news events or changes in volume, for example. Let's say you're watching the chart for a company's stock and they announce stellar earnings.
So good news, the price should go up.
Yeah, that's the logical assumption. But here's where elasticity comes into play. If the demand for that stock is highly elastic, meaning buyers are very sensitive to price changes you might see. A quick spike, followed by a pullback, as some traders take profits. On the other hand, if the demand is inelastic, perhaps because investors believe the company has a long runway for growth, that initial price jump might be more sustainable.
That's really interesting. I hadn't considered the impact of elasticity on how news events play out in the markets. I guess it's another layer of the puzzle, understanding not just the news itself, but how the market is likely to react to it based on how sensitive buyers and sellers are at that moment.
Exactly. It's about reading between the lines, connecting the dots between price action, news flow, and market psychology, and here's another piece of that puzzle. Remember, it's not always. A perfectly rational game, manipulation, can also distort the supply and demand dynamics.
Wait, manipulation, like
Yeah.
people intentionally trying to create artificial price movements. I thought that was illegal.
It is, but unfortunately, it still happens. There are various tactics that manipulators can use, like spreading false rumors to trigger fear or greed, or using watch trading to create the illusion of high volume and activity, making it seem like there's more demand than there actually is.
But isn't some level of price influence
Mhm.
normal in a free market? Like companies trying to create hype for their products, or
Yeah.
investors sharing their bullish views. How do we distinguish between healthy market activity and outright manipulation?
That's a great question. The line can be blurry, but generally speaking,
Yeah.
manipulation involves deceptive tactics intended to mislead other participants for personal gain. It's about creating a false picture of market reality.
So it's like that classic saying, caveat emptor, buyer beware, even though
Yeah.
we're learning all these cool insights about supply and demand. We still need to be critical thinkers
Yeah.
and do our own research.
Absolutely. A healthy dose of skepticism.
It is essential.
In any market. Don't blindly follow the hype. Look for independent sources of information.
Again.
Be wary of those who claim
Okay.
to have all the answers or guarantee profit.
Okay, so we've gone from Econ 101 to some pretty advanced trading concepts here. We've learned how the basic forces of supply and demand drive price movements, how elasticity influences market reactions, and even how manipulation can distort things. It's like having X-ray vision into the markets.
I like that analogy. It's about seeing beyond the surface, understanding the motivations and forces at play behind those green and red candles on your chart.
Wow. Feels like we've uncovered a whole new layer of understanding, seeing the market through this lens of supply and demand. You know, and I always thought those price charts were just reflecting, well, price. But now I see they're telling like a much deeper story about that constant battle between buyers and sellers.
Like a live, ongoing narrative, constantly unfolding, and each price movement is a chapter in that story, driven by shifts in supply and demand, news events, market sentiment, and sometimes even, as we discussed, attempts at manipulation.
Thinking back to that video that you shared, name a source video.
Yeah.
What did you say? It's like the most important takeaway. For someone who really wants to apply this knowledge to their own trading, is there like a single aha moment that stands out for you?
I think the key is to realize that every time you look at a chart, you're witnessing this interplay of forces. It's not just about the price going up or down. It's about understanding why it's moving that way, what shifted in the balance of supply and demand, what's driving buyer and seller behavior.
It's like we're learning to read the market's body language, seeing the signals behind the movement.
Exactly. And once you start seeing those signals, you can use them to anticipate potential price moves, identify favorable entry and exit points, and ultimately make more informed trading decisions.
I mean, it's not just about finding the right indicators or following the hottest tips. It's about developing a deeper understanding of those underlying forces that shape the market.
You got it. It's about thinking, like a market maker, understanding how price discovery works, and recognizing that every trade you make is contributing to this ongoing narrative of supply and demand.
This deep dive has been incredible. We've gone from those basic economic principles to seeing how they play out in real-world trading scenarios. And the best part is, this knowledge applies to any asset. Stocks, crypto, commodities, you name it. It's a universal language of the markets.
Yeah, it's a framework for understanding how markets function, how prices are determined, and how to navigate this complex and dynamic world.
So as we wrap up this deep dive, here's a thought-provoking question for you to ponder. Knowing that supply and demand are constantly at play, how might this understanding change the way you approach news events? Let's say a company announces a major product launch. How could you use your knowledge of supply and demand to anticipate how the market might react?
That's a great question to consider. It encourages you to go beyond the headlines and think about the potential impact on the supply and demand dynamics of that specific asset.
It's applied. Whole new way of thinking about the market. And it all started with those basic principles of supply and demand. We'll catch you on our next deep dive, where we'll explore another fascinating topic and uncover those hidden insights that can help you navigate the markets with more confidence and understanding.